Crypto is moving fast, and if you're not paying attention, you're already behind. 2025 is shaping up to be one of the biggest years yet, with major innovations, institutional moves, and massive opportunities ahead. But here's the thing. Not all trends will survive. Some will make millionaires. Others will crash and burn. So in this episode, we're diving into the biggest crypto trends of the year, the ones you need to know before the mainstream catches on. Stay until the end, because we'll also break down the number one mistake most investors will make this year and how you can avoid it. Let's get started. Bitcoin's halving is one of the most critical events in the crypto space, historically marking the start of massive bull runs. Every 4 years, the number of newly minted Bitcoins per block is cut in half, reducing the supply of new BTC entering the market. This programmed scarcity has, in the past, led to exponential price increases as demand outstrips supply. But this time, things are different. Unlike previous cycles, Bitcoin is no longer just a retail-driven asset. Institutions are now playing a massive role, and they're accumulating at a pace never seen before. The stakes are higher than ever, and the market dynamics have changed significantly. So, what happens next? Will Bitcoin surge to new all-time highs? Could we see Bitcoin reach 150K, 200K, or even 500K in this cycle? And most importantly, how can investors prepare for what's coming? Let's break it down. Bitcoin ETFs have completely changed the game. For years, institutional investors struggled with regulatory and security concerns that made direct Bitcoin investments difficult. But with the introduction of spot Bitcoin ETFs, led by financial giants like BlackRock, Fidelity, ARK Invest, and VanEck, institutions now have an easy and regulated way to buy Bitcoin. And they're buying at an unprecedented rate. One of the most shocking statistics post-halving is that institutional demand for Bitcoin is far exceeding the daily mining supply. Before the halving, miners were producing 900 BTC per day. After the halving, this number was cut to 450 BTC per day. But here's the catch. Bitcoin ETFs are buying far more than that. In fact, some days, ETFs have been absorbing up to 10 times the newly minted supply. This imbalance is creating a major supply shock, which historically has led to explosive price increases. Let's look at some of the biggest institutional players jumping into Bitcoin. BlackRock, the world's largest asset manager overseeing 10+ trillion in assets, is leading the charge with its iShares Bitcoin ETF, IBIT. BlackRock's ETF alone has already accumulated over $15 billion worth of BTC in just a few months. Fidelity and other traditional giants. Fidelity, Franklin Templeton, and other legacy financial firms are now aggressively adding Bitcoin to their ETF portfolios, bringing in billions of dollars in demand. Hedge funds and pension funds. For the first time ever, pension funds and institutional hedge funds are beginning to allocate a percentage of their portfolios into Bitcoin. Even if major institutions allocate just 1 to 2% of their assets into BTC, the price impact could be massive. This institutional FOMO is on a scale we've never seen before, and it's only just beginning. But the biggest question remains. Many analysts believe we're on the verge of Bitcoin's biggest bull cycle yet. Price predictions are all over the place, 150K, 200K, even 500K Bitcoin. But is that realistic? Let's break it down using data, historical trends, and supply-demand dynamics. Bitcoin's price history has followed a predictable cycle around every halving. Halving event occurs. Bitcoin supply is reduced. Accumulation phase. Smart money starts accumulating at lower prices. Parabolic bull run. Price explodes as demand outpaces supply. Blow off top. Retail FOMO drives prices to euphoric highs. Bear market correction. Bitcoin retraces, setting up for the next cycle. Let's look at how Bitcoin performed after past halvings. 2012 halving. BTC was $12, peaked at $1,000, 83x increase. 2016 halving. BTC was $650, peaked at $20,000, 30x increase. 2020 halving. BTC was $8,000, peaked at $69,000, 8.5x increase. Each cycle has delivered diminishing returns as Bitcoin's market cap grows. However, even a 5x increase from pre-halving prices in 2025 could push Bitcoin well past 200K. Right now, Bitcoin's total supply is capped at 21 million coins, with over 19.6 million BTC already mined. However, an estimated 4 to 5 million BTC are lost forever due to forgotten private keys, early adopters losing access, and long-term storage mishaps. That means we have less than 17 million BTC actually available, and institutions are trying to grab as much as they can. With ETFs absorbing thousands of BTC per day, it's only a matter of time before demand skyrockets prices. If Bitcoin captures just 5% of global institutional capital, we could see prices well above 200K. If Bitcoin becomes the digital gold standard, with mainstream adoption by banks and governments, we could see 500K plus BTC in the long run. But what could stand in the way of this explosive growth? Despite the overwhelming bullish indicators, there are some risks to watch out for. Regulatory uncertainty. While Bitcoin ETFs have been approved in the US, other governments may take a harder stance on crypto. If major economies like the EU or China impose stricter regulations, it could slow down institutional adoption. Macroeconomic conditions. A global recession or financial crisis could impact speculative assets, including Bitcoin. However, some argue that Bitcoin is becoming a hedge against traditional finance risks, making it even more attractive during economic uncertainty. Market manipulation in whales. Large Bitcoin holders, whales, have the ability to manipulate short-term price movements by strategically buying or selling. While this has always been a factor, increased institutional control could reduce extreme volatility over time. Despite these risks, the long-term trajectory for Bitcoin remains overwhelmingly bullish. When Bitcoin pumps, altcoins follow. But this time, the market isn't just riding on speculation. It's being driven by real utility, AI integration, and mass adoption. The next altcoin season isn't just about random meme coin pumps. It's about identifying the projects with game-changing innovations, the ones that could deliver 100x gains in the coming years. So, where should you be looking? What sectors are leading the charge? And which altcoins have the highest potential to dominate? AI is already revolutionizing industries. And now, crypto is integrating AI at an insane pace. We've already seen massive interest in AI-driven blockchain projects, with certain coins surging hundreds of % in the past year. But this is just the beginning. Blockchain and AI are two of the most disruptive technologies in the world right now. When combined, they unlock decentralized AI models that remove control from big tech giants like Google and OpenAI. Automated smart contracts that can make real-time AI-driven decisions. AI-powered trading and DeFi that optimizes yield strategies better than any human. Data privacy and security for AI algorithms, preventing data monopolization. Fetch.ai, FET, a decentralized AI network designed to automate complex processes in DeFi, supply chains, and more. SingularityNet, AGIX, a marketplace for AI services allowing developers to create and monetize AI applications on-chain. Render Network, RNDR, a decentralized GPU rendering system that powers AI-generated content, including metaverse and gaming applications. The AI sector is expected to grow into a $1 trillion industry, and the crypto projects integrating AI successfully could see 100x plus gains. But AI isn't the only sector heating up. Ethereum remains the backbone of DeFi, NFTs, and smart contracts, but its high fees and network congestion have left room for competitors. Layer 2 solutions are designed to fix Ethereum's scalability issues by handling transactions off-chain while leveraging Ethereum's security. Arbitrum, ARB, one of the leading Layer 2 solutions with deep DeFi adoption. Optimism, OP, a direct competitor to Arbitrum, focusing on faster transactions and lower fees. ZK Sync, ZK, a cutting-edge ZK rollup solution that aims to fully scale Ethereum with near-zero fees. The Layer 2 project that dominates will capture the majority of Ethereum's transaction volume, and potentially become one of the top-performing altcoins of this cycle. Watch for mass adoption, ecosystem growth, and Ethereum's next major upgrade, which could change the Layer 2 landscape entirely. Imagine buying real estate, stocks, or fine art on the blockchain with instant transactions and no middlemen. This isn't a fantasy. It's already happening. BlackRock is testing tokenized bonds. Goldman Sachs is working on tokenized assets. Governments are exploring CBDCs and digital bonds. The question is, which blockchain will power this revolution? Avalanche, AVAX, already securing major partnerships in tokenizing real-world assets. Chainlink, Link, the most important Oracle network, ensuring secure and accurate price feeds for tokenized assets. Polkadot, DOT, and Cosmos, Atom, multi-chain ecosystems that could facilitate cross-chain tokenization. Tokenized real-world assets are expected to reach 16 trillion by 2030. The blockchains facilitating this transition will see massive adoption and value growth. Love them or hate them, meme coins are back. But this time, something's different. What started as a joke with Dogecoin has now turned into a multi-billion-dollar market. Meme coins are no longer just random pumps. They're evolving into full-fledged ecosystems. The question is, are meme coins just hype, or can they actually make serious money? Let's dive in. Traditional finance relies on fundamentals, earnings, and balance sheets. But crypto, it's different. Meme coins aren't about utility. They're about community. And in a world where social media drives financial markets, community is everything. Some meme coins are launching staking, farming, and lending. Others are using NFTs to build brand identity and exclusivity. Companies are starting to accept meme coins as payment. Meme coins are no longer just meme-fueled speculation. The biggest ones, Dogecoin, Shiba Inu, and Pepe, are expanding their ecosystems. The next wave could be even bigger. But how do you spot the next 100x meme coin before it pumps? Not every meme coin will survive. Most will crash and burn, but some will explode in value. What to look for? A loyal, active community can push a meme coin to the top. If it's memeable, it can spread faster than anything else. Low supply, fair distribution, and anti-dump mechanisms matter. The right celebrity backing can send a meme coin flying. Get in before the hype wave hits. Because once mainstream FOMO kicks in, it's too late. The crypto industry is growing too fast for governments to ignore. But the question is, will regulation kill innovation? Or will it actually make crypto stronger? Right now, regulators are cracking down hard. The US SEC is tightening its grip on crypto like never before. Lawsuits, delistings, and stricter regulations are creating major uncertainty for the industry. Crypto projects are being targeted one by one. Binance fined billions and forced to exit the US market. Ripple fought back against the SEC and won a partial victory. Kraken and Coinbase facing lawsuits over unregistered securities. Is the US pushing crypto out? While the SEC cracks down, other countries are welcoming blockchain innovation. Dubai, Hong Kong, and Singapore are attracting top crypto companies. Dubai's free zones make it a haven for crypto startups. Hong Kong is launching its own crypto-friendly policies. Singapore has clear regulatory frameworks. Meanwhile, El Salvador made Bitcoin legal tender and continues to accumulate BTC. Europe is moving fast too. The Markets in Crypto Assets framework provides legal clarity, something the US still lacks. Will major crypto firms leave the US for these crypto-friendly regions? If the US continues its aggressive stance, we could see a mass exodus, changing the entire balance of power in crypto. Governments aren't just regulating crypto anymore. They're launching their own digital currencies. Central bank digital currencies are coming. China has already rolled out the digital yuan. The European Union is testing the digital euro. The US Federal Reserve is exploring a digital dollar. But are CBDCs good for the financial system or a tool for control? CBDCs could give governments unprecedented financial power, reducing financial freedom. Imagine a future where your digital wallet could be frozen instantly, but CBDCs could streamline payments and make transactions smoother. But at what cost? Crypto fights for decentralization. Governments fight for control. This battle is just getting started. This isn't 2017. It's not 2021. The next bull run is shaping up to be completely different from anything we've seen before. Why? Massive changes are happening behind the scenes. Crypto is no longer just for tech geeks and hardcore investors. It's going mainstream. PayPal, Visa, and MasterCard are integrating crypto payments. Major retailers are starting to accept Bitcoin and stablecoins. Traditional banks are getting involved, some even offering crypto custody services. More adoption equals more demand equals higher prices. And that's just the beginning. In previous cycles, retail investors were the ones fueling the bull runs. But this time, the real power is shifting. Hedge funds, billionaires, and major corporations are moving into crypto. Institutional investors are buying in at a record pace. Spot Bitcoin ETFs are unlocking trillions of dollars in new capital. This changes everything. Before, crypto was a high-risk bet. Now it's becoming a serious asset class. And with institutions holding long-term, the supply squeeze is just getting started. Once Bitcoin breaks into new all-time highs, expect massive retail FOMO. We've seen this play out before, and history shows it's about to happen again. 2017, bull run, Bitcoin hits 20K for the first time. 2021 bull run, Bitcoin surges to 69K before crashing. 2025 bull run? How high will it go this time? But here's the truth. Most people will miss the best buying opportunities. Every bull market follows a similar pattern. Smart money accumulates early while prices are low. Retail investors ignore crypto, calling it dead. Bitcoin starts climbing, media attention increases. Retail investors FOMO in, pushing prices even higher. Whales take profits at the top while retail buys in late. A major correction wipes out latecomers. The biggest gains happen before FOMO kicks in. If you're waiting for Bitcoin to hit 100K before buying, you're already too late. If you want to make serious gains, you need to think like smart money. Accumulate before the hype starts. Hold strong narratives. AI, layer 2s, and real-world asset tokenization are trending. Don't chase pumps, buying after a coin 10x'd. That's what retail does. Take profits. When everyone is euphoric, smart investors start cashing out. Remember, most people buy at the top and sell at the bottom. Don't be like them. New all-time highs will trigger massive media attention. Expect Bitcoin on every news channel. Retail FOMO, everyone from your Uber driver to your grandma will ask about crypto. Altcoin explosion, the best altcoin gains happen after Bitcoin's rally. The question is, will you be ahead of the curve, or will you chase the hype like everyone else? This year's crypto market is moving fast. If you're not paying attention, you could miss out on life-changing opportunities. But here's the thing, most people will wait until it's too late. What do you think is the biggest crypto trend of 2025? Drop a comment below and let's discuss. And if you want to stay ahead of the market, make sure to subscribe, hit the bell, and follow us on X, YouTube, Medium, Instagram, and Threads at True Crypto Insights and Crypto Tribex for podcasts. See you in the next episode.